What legal requirements impact Americans' tax obligations while living in Asia? In today's fast-paced world, many Americans are choosing to live and work in Asia. This raises an important question: what legal requirements impact their tax obligations? As more people search for clarity on this topic, it is crucial to understand how United States tax laws apply to those living abroad. First off, Americans living in Asia must still follow United States tax laws. This means that United States citizens and green card holders are required to file federal tax returns, regardless of where they resided. They must report their worldwide income, which includes wages, business earnings, dividends, and interest from foreign sources. One key aspect to consider is the filing requirement. All United States citizens and green card holders must file annual federal tax returns. This holds true even if they are living outside the United States. The Internal Revenue Service allows an automatic filing extension until June 16 for expatriates. This extra time is beneficial for preparing accurate returns. Another important provision is the Foreign Earned Income Exclusion. Americans living abroad can exclude up to $130,000 of earned income from United States taxation. To qualify, they must meet either the physical presence test or the bona fide residence test. The physical presence test requires spending 330 full days outside the United States within a 12-month period. The bona fide residence test involves establishing residence in a foreign country for a full tax year. In addition to the Foreign Earned Income Exclusion, there is also a Foreign Housing Exclusion. Taxpayers who qualify for the Foreign Earned Income Exclusion can exclude reasonable housing costs from their taxable income. This includes rent, utilities, and insurance. The allowable amount varies by location, with higher limits in more expensive cities. If Americans pay income tax to a foreign country, they can claim a foreign tax credit. This credit allows them to offset their United States tax liability to avoid double taxation. However, it is important to note that income excluded under the Foreign Earned Income Exclusion cannot be used for the foreign tax credit. Americans must also report foreign bank accounts that exceed $10,000 in aggregate at any time during the year. This is done by filing the Financial Crimes Enforcement Network Form 114, which is separate from the federal tax return. Additionally, Americans living in Asia must comply with local tax laws in their country of residence. For instance, selling property in countries like Thailand may involve local taxes such as withholding tax, business tax, and transfer fees. These obligations are separate from United States tax responsibilities. Some Asian countries have transfer pricing and documentation requirements for related party transactions. This can affect Americans running businesses abroad, so it is important to be aware of these rules. In summary, Americans living abroad should carefully plan their tax filings to comply with both United States and local laws. Staying informed about annual adjustments to exclusion limits and filing deadlines is essential. Seeking professional tax advice can help navigate these requirements and optimize tax outcomes.